Sellers can pay a portion of your closing costs, and according to Redfin, this first quarter, 44.5% of home sellers are paying buyers' closing cost. So, what are seller concessions? They're a contribution from the seller to aid in your closing cost and prepaid items. That would be like taxes and insurance. However, they cannot pay all of your closing costs typically. They can pay a maximum of a percentage. On a government loan like an FHA or rural development loan, it's typically a maximum of 6%. And on conventional loans, it's usually 3% of your sale price. So if you're buying a home for $200,000, 3% would represent $6,000. That's the most that they can contribute towards your closing costs, property taxes, and insurance. So they can pay a portion of it. If you're buying an investment property, typically the cap is 2%. So why would sellers want to do that? Well, I gotta say that oftentimes it does weaken your offer, and depending on what the other offers are coming in, if there's other offers that are coming in, will determine if the seller is willing to accept your offer. Because if you think of it like this, if you have a $200,000 sale price and you're offering $200,000 and you're asking the sellers to pay $6,000 of your closing costs, what you're really offering them is $194,000. And if you say, well, let me give you $206,000 and have you pay $6,000 of my closing costs, that's great too. However, the house has to appraise for $206,000. And sometimes sellers are concerned about that. So what sellers will look for is what the net that they're going to be receiving, how much money they're going to make on their home, and then how much the house is expected to appraise for. And they'll take into those two considerations when considering your offer against other offers. Closing costs can never go towards your down payment. Let me explain. So let's say that you're going to be purchasing that home for $200,000, you're putting 3% down, that's a $194,000 loan amount. The seller agrees to pay 3% of your closing costs. It cannot go towards your down payment. It can only go towards closing costs and prepaid items. And typically they don't pay, it doesn't cover all of your closing costs, so you can still expect to need maybe 1 or 2% more. Also, seller concessions can do things like buy you points, pay down your interest rate to pay points to buy down your interest rate, either short term or long term, giving you a lower interest rate for the life of the loan or giving you a lower interest rate for the first 2 to 3 years. The best thing to do is to run through different scenarios with your real estate agent and your lender and to say, if this, then this, if this, then this, and give yourself a good understanding of what you'd like to do. Most of the time, seller concessions are used to pay for closing costs. Thank you for watching. If you find this video helpful and you think others might benefit from it, please share it out. This is Dawn Connors at Mortgage One, providing you fantastic mortgage solutions.